How the 2018 Tax Cuts and Jobs Act impacts members of IATSE, featuring Ted Frick of Frick & Associates, PC, Certified Public Accountants. Ted, can you explain the 2018 Tax Cuts and Jobs Act? What are the changes?
Well, the answer to that could be quite lengthy. There's certain key provisions that will drastically change the way taxes reported in 2018. The Act itself is about 450 pages long. What I often tell people when they ask me to explain the Act to them, that in addition to that 450 pages, of course, there'll be thousands and thousands of pages of IRS regulations to implement the law as well. I recently had a vendor that right after the Act was passed gave me a call and said that they had analyzed the new Tax Act and they put it in the form of a book to explain it, and would I like a copy of it? So I ordered a copy, it arrived. The explanation was 800 pages long. So there's a lot of things that did change. The main things that people have heard of and will affect them immediately, one of them is the elimination of exemptions. So the idea of having dependents and exemptions on your tax return will pretty much go away. One question I often get is that are the changes to the 2000 tax returns good for everybody or are they bad for everybody? And that's really impossible to tell. The changes are so pervasive that you really have to sit down with each individual tax return and analyze how the changes affect that particular return.
Let's talk about exemptions and deductions. How are they different now?
In the previous tax returns through 2017, each member of your family was entitled to a $4,050 exemption. So, for instance, a single person had $4,050, but a family of 5 had over $20,000 worth of exemptions. Those exemptions completely disappeared from the 2018 return. The other big change is that the standard deduction, people that did not itemize their deductions on their individual tax return, is doubled. So for single, it goes up from about $6,000 to $12,000. For a married couple, it goes up from $12,000 to $24,000. So that's kind of a big jump as well. On the other side, people that are itemizing, there's a limitation of $10,000 for all taxes. That means both your state income tax and your property taxes added together. So you've got a $10,000 limit there.
Which changes are most likely to affect people in the film industry?
One of the key provisions that will affect people in the film industry is the complete elimination of unreimbursed employee business expenses. So for people that are getting most of their income from W-2 income, there's no place on the return where you're going to be able to report your expenses. Pretty much all the expenses that you've been reporting on Schedule A of your tax return, sort of at the bottom of the page where it says miscellaneous itemized deductions. Those include what's reported on what's referred to as Form 2106, unreimbursed employee business expenses. And that can hit everything from mileage, travel, union dues is a big one, tools, any out-of-pocket expense that you might incur in your business that's not being reimbursed from your employer. So pretty much everything that you've been looking at and deducting goes away. Going into 2018, if all of your income is W-2 income, it's going to be very difficult to find a place that you can report expenses and get a deduction for those expenses. Like I said before, the Schedule A pretty much goes away, at least the portion of it that relates to unreimbursed employee business expenses. So there's really no place to put those expenses on the return. Now, if you have 1099 income, we can use one of the other methods of reporting those expenses, either putting them on the front of the return, we can use a Schedule C to report those expenses, or we can recommend and have you set up a separate limited liability company and a subchapter S corporation and report it through the business entity.
What's the best way to report the rental of my equipment?
The other method that we've been using to deduct expenses, there's really two ways of handling. One is if you have relatively minor amounts of income from rentals of equipment, say to the production company, a couple of $1,000s maybe. Those we normally will report on line 21 right on the front of the income tax return as other income, and then we'll take deductions, hopefully enough to zero that out on line 36 as other expenses on the return. In doing so, you can only take expenses up to the amount of income that you have. You can't show a loss using that method. The other is that we put both the income and the expense on Schedule C of the return. That's reporting as if you're a sole proprietor. In that case, you can take expenses that will exceed the amount of income, so you can actually show a loss that would offset some of the W-2 income that you have on the return. The downside is if you don't have enough expenses to equal the amount of income that you had, then in that case, that net income is subject to Social Security and Medicare tax. So you're paying an extra 15.3% on top of the income tax on that amount of net income that you have. So it depends on whether we put it on the front of the return. If we're doing it that way, what you're telling the IRS is that you're not really in the business of making money from the rental of your equipment. If it's going on Schedule C, what you're telling the IRS that you are in the business of renting equipment and making a profit from it. Now, we do have clients that have several hundred of thousands of dollars in rental income each year. It's hard to argue that they're not in the business of trying to make money and make a profit from that. So generally that'll go over on the Schedule C side, whereas relatively smaller amounts, $2,000, $3,000, we'll put on the front of the return.
Should I form a company?
Usually when the amount of income becomes substantial and it's pretty evident you're in the business of renting equipment, making a profit from that equipment, we'll recommend that you set up a separate entity for it. Usually that's done by registering with the Secretary of State initially as a limited liability company or an LLC.
What is an LLC?
It's strictly a legal term. The Secretary of State understands that term. All the attorneys in the world understand that term, but the IRS does not understand the term and does not have a definition for an LLC, nor do they have any tax forms to report income or expenses for an LLC. So in that case, the Internal Revenue Service allows the taxpayer to choose how they want to be taxed. And they really give you four choices. One is if you do absolutely nothing, then the IRS is going to call that a disregarded entity, and those expenses and income will be reported on Schedule C of your return. Your second choice, if there's more than one member of the LLC, would be to report the income and expenses as a partnership. Your third option is to report as a regular corporation, similar to the big companies like Delta Airlines or Coca-Cola, but you run into a situation where you're going to be double taxed. The corporation is going to pay tax on the income, then you're going to want to get the money out of the corporation to use yourself, and the only way to get it out is either as a dividend, which you're going to pay taxes on again, or a salary that you're going to be paying taxes on again. And then the fourth option is the one that most people will choose, is to be taxed as a subchapter S corporation. Sub-S corporations are what are referred to as pass-through entities. So the corporation itself pays no taxes. The income or loss from the corporation is passed directly through to the taxpayer's 1040 and reported on that form. Now the advantages there are that we can somewhat manipulate the amount of tax, particularly the self-employment tax, Social Security and Medicare tax, that would be paid if you had reported all that income on Schedule C by giving you what's considered a reasonable salary from the Sub-S corporation and then reporting the remainder of it as Subchapter S income, which is not subject to the Social Security and Medicare tax.
Would it make sense for film workers to form an LLC this year?
Well, again, making the choice to form an LLC is going to be an individual situation where you have to take into account all your expenses and what you anticipate your income is going to be for the year. You can make late elections late in the year and go back and make it retroactive back to the first of the year if you're not sure whether it's going to be to your advantage to form one right now or wait until, say, October, November of this year to do it. I would say that the most important thing is going to be the amount of net income that you end up generating from the LLC or the business that you're in. And that amount needs to be somewhere around $15,000 net income for it to make sense to set up a separate company. The reason for that is before you're going to really start putting money in your pocket in savings from setting up the separate entity, you have to generate enough money to pay the additional expenses. There's a separate tax return that has to be prepared for sub-S corporation. There's additional record keeping. There's registration fees with the Secretary of State's office. So there's a number of additional costs and time that you're going to have to invest in running a separate business as a subchapter S corporation that you need to overcome before it really becomes profitable to you. And generally, the way I look at it, that's about $15,000, maybe a little bit greater than that. In prior years, that number was probably higher than what we're looking at today, where you did have the option of being able to deduct your expenses directly on your individual tax return on Schedule A. So that number has dropped down over the last couple of years in anticipation of going into the 2018 tax year.
How do you form an LLC?
There's a number of ways that you can form one. There's a number of online companies that will do that for you. Certainly, most attorneys will help you set up a limited liability company. You can do it yourself by going directly onto the Secretary of State's website, or accounting firms will help you with it as well. We set up LLCs for clients, probably several of them every week. And generally the setup cost is around $500, including the registration fees with the Secretary of State's office.
You mentioned reporting equipment rentals on Schedule C and Subchapter S corporations. Which one is better for film people?
Well, again, it's going to depend on the amount of activity that you have, the amount of income that you're generating. If your income, again, is relatively small, let's say $2,000, $3,000 from rentals, then I'd just put it on the front of the return. We can take expenses up to the amount of your rentals, and that would be perfect for you. If, in fact, though, that your rentals are a substantial amount, getting up into the tens of thousands of dollars, we have some clients that report well over $200,000 a year in equipment rentals. You're going to want to use Schedule C for that because it really is a business where you're trying to make a profit from those rentals. And you do have the ability, particularly next year where everything that you buy can be 100% expensed in the year that you buy it, you may generate losses that can be used against your W-2 income as well. So it really depends on the size. Now, again, if the income is going to substantially exceed the amount of your expenses, then I probably would recommend that you form an LLC and report as a Subchapter S corporation in order to avoid some of the self-employment taxes that are going to be inherent in reporting on Schedule C.
What is a statutory employee? Is that something I should look into?
A statutory employee is a individual that gets a W-2, but there's no Social Security and Medicare taken out of that W-2 by the employer. The IRS has very specific regulations as to who can be classified as a statutory employee. And there's very few people that actually meet those qualifications. In the film industry, it's actually been tested in tax court already. There was a case, Kelly case, where a makeup artist in the entertainment industry took the IRS to tax court and wanted to be classified as a statutory employee. The tax court found that that was not possible. So the answer to that is no at this point. The only way that that would be feasible would require a great deal of changes to the tax code, either legislatively or regulatorily by the Internal Revenue Service. The employer is going to make the final decision. They would have the final say in it. It's very unlikely that they would approve it. Even if the employer approved it, they would run into problems with their payroll servicing companies. So I don't see that happening anytime soon. Again, it's going to require significant changes by the IRS to their regulations, or a change by the U.S. Congress and legislation that would bring maybe the film industry into it, maybe some other industries into it, and classify people as statutory employees. But I really don't see that happening.
What's the big picture for 2018 and beyond?
I would think it's going to be more difficult going forward to prepare your own tax returns. There's going to be a lot more decisions that need to be made. There's going to be a lot more planning that you need some professional help with that really wasn't there to such an extent in the prior years. So I would look at those factors. In fact, this year was actually the first year I went through TurboTax and figured out how it works. I've had clients that have come in for years and they said, well, we've been doing our tax returns on TurboTax, but this year something went wrong and we owe the government a lot more money than we thought we were going to, so can you take a look at this? This year somebody came in and actually sat down with them and went through the program for the first time ever to see how it works. And it works off asking questions rather than putting numbers in boxes like we do. And if you answer those questions incorrectly, like this particular client did, it can lead you down a path that you don't want to go and result in that you're going to have a much larger tax liability than maybe you thought you were going to have. So at least for 2018, probably 2019, I would definitely recommend that you get professional help, particularly on the planning side, as well as the compliance or preparation of the tax returns. I would say the takeaway is going to be the need for extensive planning prior to the end of the year. That's something we try to do with all of our clients anyway, but in this year it's going to be extremely important to do that pre-planning, that year-end tax planning, that a lot of times you run out of time, you postpone, you don't get it done by the end of the year. So that's something that's going to be critical in this coming year, to make sure that if there's things that need to be done before year end, we get those things done. If there's things that need to be done in the next year, that you've already planned for those and initiated activities that would lead to that. An example might be whether you're going to set up a LLC for the next year, or if you're going to set up a LLC for 2018 and try to make it retroactive back to the first of the year, would be certainly decisions that we need to make prior to the end of the year coming up. The other would be looking at what types of expenses you have, what opportunities that you might have to generate other 1099 type income rather than strictly W-2 income would be important going forward, and looking at those activities that could generate that type of income for you.